Okay, this week in review, I wanted to start out with something I think everyone needs to kind of prepare themselves for, and that is kind of the mania of markets, and especially if David Hunter's prediction comes through, with a melt up, and it's really well illustrated by something called Tulip Mania from basically it was 1635 and 1636 where people were buying up uh, tulips and the price of them went up. And this can be illustrated in this particular graphic that I'm bringing up here. And you can see that it started down, in 1634. We've got ourselves kind of the price slowly going up, and then, everybody wanted one and it drove the price up. Now, this story is in a book called Extraordinary Popular Delusions and the Madness of Crowds, and it's actually a very good read for what I think we may be running into if we get the melt up. But we're actually seeing it right now. And so let me go over to look at what's happening with NVIDIA. Now, if you remember, I'll put up here the tulip diagram, but kind of move it along, and then and then craziness is starting to happen. And so NVIDIA has this huge gap here now of basically $75 run up in the price. Unfortunately, I did not participate in this. I've owned NVIDIA off and on. I did participate in it indirectly through SMH, which is an ETF of basically semiconductor types of companies. So I did get some benefit from it, but I didn't get the $75 run up or the 27% increase. It would have been nice just to have one in there that would do something that crazy. But it kind of tells us about this whole AI thing, and it's really developing a lot of mania around it. And can even see with AI, which I've owned off and on. I'm out of it again now because of the run up. We start to clear a level up in here. Let's say even clear this level, say $35, and I'll probably get back in it. If it holds, or I may wait for a pullback again. But these things can run up, and they can run up very quickly, and they can also run down very quickly. So that's kind of the Tulip Mania portion. But I strongly recommend. I mean, there's other stories other than Tulip Mania in Extraordinary Popular Delusions and the Madness of Crowds. The South Sea Bubble. There's a whole slew of them in there that you can read about how people react to kind of mania types of situations, and then when they fall apart, how they react also. And I think it's important, especially now, because I think we're starting to see some destruction of civility in our environment here in the U.S. So anyway, I wanted to recommend that. All right, let's take a look at this past week economic calendar. We obviously had all of the Fed members came out, did speeches. We're going to do this, and we're going to raise rates and that type of thing. And, they're welcome to they're not under a gag order right now. So we look at the PMI came out. It came out a little bit hotter than was expected, and not just from the previous report, but also what the expectation was. So, these things have a tendency to affect the markets a little bit. New home sales, 4.1% for, and where there was a forecast out there of -2%. So slightly above what it was last time. Then we had the FOMC minutes. Now, it did change the wording, which we'd already known because Powell spoke after they raised the rates, but this is the minutes from when they talked. And it just basically said, they're just going to watch the data and raise if they have to. They didn't promise one, kind of like they have been. So that was kind of my takeaway from that. Thursday, we had, I missed the mortgage rate is inching up, and I'll talk about that when I get to the market data in that portion. But it's edging up and will probably continue to edge up, and for the reasons I'll explain when I get to the market data. Thursday, we had GDP estimate came out at 1.3%. It was expected to be 1.1. Nothing to write home about. Initial jobless claims came in a little lighter than expected, a little more than the previous period. Corporate profits are down. Pending home sales way down. And then obviously today was to be a big day. I mean, durable good orders came out better than expected. We had core PCE, came out above 0.3%. And I was curious to see how the market would react to it, and it really didn't. It kind of initially went down and just a little bit, and then really the rest of the day spent going up. Then we have later in the day we had the Michigan consumer confidence. It came in a little better than expected, but lower than the previous period. And it was just, today was a good day for the markets. I would have thought maybe PCE, core PCE coming at 0.4% would have driven it down, but it didn't. It actually kind of gathered some steam as the day went on. All right, let's take a look at next week. Dates. Let's go to here. Okay, and so next week we look for, obviously Monday the markets are closed for Memorial Day. Tuesday we got Dallas manufacturing. I've mentioned many times that manufacturing to me is a really key indicator for the economy and economic strength. MBA 30-year mortgage rate, again, I expect to go up. Get to that in the next report. And as far as the market, JOLTS job openings came in a little bit better than, our forecast to be a little worse than last period, 9.35 million. We should start to see this number start to decline based off of the Fed funds rate. And ISM manufacturing PMI looking to stay steady around 47. Anything less than 50 is contracting. Unemployment rate and non-farm payrolls on Friday are definitely market movers. And, they've had such huge revisions the last few times. I'm curious to see if there's more revisions in this report, but also to see if we're still creating jobs. It's going to end at some point. I hope it doesn't, but it will. So that's a look at the economic calendar. Let's take a look at the market, starting with the Dow Jones industrial average. And, here, this is the daily. Let's just kind of take a look at the weekly. We have, a line that's basically starting here. Let me delete that. All right, got craziness going on here. All right, I have a couple things going on here. I have this wedging pattern here, and let me see if we can make this a little bit bigger. With the Dow Jones, and again, this is the weekly. Let's go back to the daily. I think it might. There we go. So we have this wedge here that it broke down below. And then I noticed that kind of have this head and shoulders pattern working, which I've talked about before. And, we're building the right shoulder right now. This thing starts to turn back up, then we'll look for a break of the neckline here, around 34, roughly 34, 4-ish. And so we'll see if this thing continues to build out. And it's back to the weekly data. We're having a pretty good week. Now, one of the things I did change my green and red to blue and yellow, psychological reasons. But blue obviously is a candlestick that's going up, and yellow going down. The SPY, again, kind of the same thing, and we'll talk about the SPY again here in my final comments. The Qs, which don't carry the boat anchor of the banks, and I don't think we need all of this right now, is like Tulip Mania. I mean, we're building some momentum here. All-time high of around 409-ish, and we're at 348 at the moment. So we're making good progress, making our way back up to the all-time highs. And the more we pass these kind of areas, 370.26, and then the all-time high here, this is going to build a case for David Hunter's melt up, and we'll see what happens there. The dollar has been on a roll, so here we go with the dollar making its way back up. My expectation again is we might get up here around 105 again, and then we'll start to see it roll over. That's at least my expectation. The 10-year, we basically, let's go back to the daily data. Let's reset this chart. You see we left this gap here, and this is something that David Hunter has mentioned on numerous occasions, is probably going back up to fill this gap. We came close today, maybe halfway there today, and now we got to get the rest of the way, which just is a little bit under 3.9%. So if it goes up, fills that gap, then David Hunter's expectations then will start to roll over again. But we'll see how that plays out. Obviously, as this goes up, it's interesting. The market is going up. Usually they go opposite of each other. Certainly seen commodities go the other way at the moment. WTI crude, pretty flat for the week, up a little bit. Again, expectation is, as I continue to educate myself on this, it looks like to me, this, from my perspective, this looks like a bear flag. So we got this going, and then we got this going here. And that's what a bear flag looks like. You get this kind of upward trend, and then you're going to see things drop off here at the bottom. So we'll see what happens with regards to crude oil. Could flag for a while here. The VIX started to make its way back up a couple of days ago, and then now it's been crushed back down. And so, again, options become less expensive. Volatility is less typically. And so, as this goes down, it usually coordinates with the markets going up, which they are. And so the investor sentiment stayed pretty well flat, although we had a few people move from neutral to bullish this week, which is not surprising with the movement of the market in the last couple of days. And the fear and greed index, people are getting greedy again. Got a lot of things. Market momentum, stock price strength is neutral, some fear, and the breadth. And the breadth, that's maybe something to make mention of is, I read that basically the whole market is being driven up by 7 stocks, So that's primarily the FANG stocks, Apple and Amazon and Netflix and Google and that particular list of stocks. And, it's not surprising that they would be leading, but the breadth of the market, the rest of it, I believe the statistic I saw was 1%. So, now whether that's exactly right or not, I got it off of Twitter, but I think that's probably fairly accurate. So we haven't seen all stocks move. It's only been the big ones, that especially those involved with AI. So that's it for investor sentiment. My final comment, I was to go back. I want to take a look at the SPY, and I'm calling this crossing the Rubicon. Now, if you know, the Rubicon isn't just the name of a Jeep Wrangler type. It's a river that if a Roman crossed the river with an army, or anybody crossing the Rubicon with an army, then they were either traitors or threats to Rome. And so when Caesar took his army, after he had been fighting some battles across the Rubicon, then that kind of set the tone. Now, to me, there's a couple different. I mean, there's going to be a lot of moments of truth if we're going to get this all-time high and this melt up that David Hunter talks about. Now, if you aren't familiar with David Hunter, you haven't heard me talk about it before, he has predicted that we'll reach all-time highs for the Dow Jones, the Russell, basically pretty well. You talk about breadth. He's talking about all stocks pretty much moving up except for oil. And so this area here that we're trying to fill this gap has been really problematic to them to reaching all-time highs. And it was starting to get up there, fell way short there. We've now gone up there a couple more times on different days. And so we haven't quite crossed this. And this is kind of the first Rubicon, if you will. And then we have this kind of uptrend that we started that I'd like to see us recapture that, from a momentum standpoint. Let me put this on weekly. I think it might be a little easier to see. So I reset it. There we go. And so you have this downtrend that we finally broke back. When was that? Probably in the beginning of this year. And, we started to go up. I thought, oh, this could be great. And then just kind of continued to sloth its way up to the top here. But we need to cross this 420. In my opinion, we cross this line here at some point, this trend line here. And, there's some work to do there. But I think that gives you some momentum to hit the all-time high and then go to the runoff. Now, SPY is something where David Hunter is expecting to get to 600, but we got to get to 480 first. We get to 480 and we start going beyond. Now, if we look at NVIDIA, we're at all-time highs already, with this one. And Apple, let me just put that in. We're getting close. We're not far. So Apple stands at sorry for the mess on here. I can get rid of these. Apple stands at 175.60 without aftermarket up. The all-time high is 182. So we're almost there with some of these larger cap tech stocks. They're pushing it with AI, and they just have strength. And but we got to see the breadth in the market that's going on in order to make things happen for David Hunter and his melt up theory. So I'm watching these. SPY's not that far away from all-time high, 477 versus 420. Dow Jones all-time 36.90. We got a lot more work to do there. Another little over 10%. And then the Qs, 405. We stand at 350. So, we'll watch these things to see how they go. I think there's going to be, the Rubicon maybe for the rest of them is to get past their all-time highs. We're starting to see it now. There is some momentum behind the market. There will be pullbacks. My guess is we may see a pullback to 330-ish, looking on the weekly chart, or even lower. It could still get around this area, 315, 314-ish, and then pop back up, and we still have a higher high. So we have, higher low, higher high, continuing. We had a little slow down in there. So anyway, that is what I'm expecting as we cross some of these Rubicons of all-time highs and some of these Rubicons on filled gaps and everything. We'll keep track of it here and see how it goes. And so that's what I wanted to cover this week. And remember, there is always a better way.